Yes, good morning traders. Most traders don't know how to identify a break or structure and how to differentiate valid break or structure and invalid break or structure. Alright, so for this video, this is a short one. I want to break down what is a break or structure, what it signifies, what it comes to show us, and what language it tells us. Alright, every movement that we see on the charts have the information. Alright, so break or structure is the movement that is giving us some information. So that information is what I want to break down and put ourselves in a better situation where we can identify a good break or structure from a bad break or structures. Alright, I also look at later with also market structure shift. Alright, I look later market structure or change of character, and we'll finish with during range. Alright, as we go to the charts and try to identify these ones. Alright, so what's a break or structure? Alright, a break or structure, just from the word break or structure, break just breaks its structure. What's a structure? A structure is just significant movement of price from one point to another. This is what I mean. You see this lowest point, this low, and this high right there. Alright, these 2 points makes a structure. Alright, it makes a price structure. So when we have price retracing and going above it, above this previous high, and closing above it with a candle, we say we have a break or structure. Alright, so we have two different break or structures. We have the break or structure that happens in an uptrend or a bullish market like this one, and we also have a break or structure that happens in a bearish or a downtrend, alright, like this one. So as we have said, a break or structure, from the name break, is when price breaks a structure, and we have said a structure is just a singular movement from one point to another, either from a swing low to a significant swing high, or a swing high to a swing low. Like we have said, this low and this high, this is a price structure. So when we have price retracing and breaking above it and closing above it, we say we have a break of structure. Price has broken structure. Alright, what does that tells us? It tells us that we have strength from the buyers. These buyers that entered at this low, they are strong, hence breaking above this previous high. Alright, and we know by fact that it takes a lot of energy, a lot of momentum, a lot of push for price to break structure. Alright, that's why we always have a retracement before a break or structure, a retracement before a break or structure, a retracement before a break or structure. Why? This retracement, it just comes to gain momentum. Price creates break or structure with heavy momentum, with heavy energy, with heavy fuel. It does a retracement for energy, alright, to rest, take more energy in form of liquidity. Alright, we are now trading the market, forex market, so that fuel is just in form of liquidity. All that rest is just coming inside to grab more liquidity, more energy, more fuel, more momentum for it to break above and create another break or structure. Alright, the same thing happens over and over and over and over again. Alright, just comes back, retraces, takes fuel or gets momentum in form of liquidity. When it has gathered enough liquidity, now it pushes price with momentum, with heaviness, and breaking above and creating a break or structure. Alright, that's why when you come to your charts, each and every time when you see a structure, you will see a strong move that creates that break or structure. Alright, most of the cases, see a strong move that will start to a break or structure. Strong move. Why? That move is coming with momentum, with energy that was taken, all that was fueled at this retracement, right? Those retracements. So as traders, when we are trading the bullish market or an uptrend, our work is to capitalize this heavy movement up. You see this heavy movement that breaks the structure, that's where we want to locate ourselves and take trade in that direction, right? This break of structure, that's where we want to place ourselves and capitalize this movement up. Alright, also have the same thing when it comes to a downtrend. Price was coming, creating a lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. Alright, and we have said a break of structure is when price has broken the last low, alright, with candlestick. We'll come to see what makes a valid break of structure. With a candlestick, not just a wick, with a candlestick. It comes inside to gather more energy, more liquidity, more fuel, more momentum for it to continue and break this previous structure. Alright, and we have said for price to break structure, it needs more energy, it needs more liquidity. Now in this case, it needs more liquidity. That's why you always find a break of structure is always created with heavy candlesticks, heavy movement. Alright, so understanding this break of structure and how they form and the narrative behind them forming the logic, the story, that's where the real deal is. Alright, you may know all this, but if you don't understand the logic behind it, the story, alright, every candlestick in the charts tells us a story, so we have to understand the story behind it for us to now understand what's entirely happening in the market. Alright, so that story is your real age. Alright, your story is your real age. Before you take a trade, what did you see? What happened? Alright, why are you taking that trade? What's the story? Alright, that price is telling you for you to take that trade. Alright, so a checklist for a valid break of structure. Not all break of structures are valid. Alright, for a valid break of structure, it must close above, alright, above this previous higher high or below this previous lower low with the body of the candle, not just the wick, with the body. Alright, and this break of structure, the presence of a break of structure indicates the strength of buyers or sellers towards that direction. Alright, we have said that when the price breaks structure, that tells us that there is more momentum, more energy towards that direction, and we expect some continuation, alright, before that trend comes to an end. Alright, so after break of structure, I should expect a pullback to the swing low or to the swing high that caused the break of structure. Why? Why do we expect a pullback after break of structure? We have said it. After break of structure, price uses more energy, more fuel to break structure, so it will come back again to gain more energy, more momentum in form of liquidity. So it just does that pullback to grab liquidity. Liquidity is fuel, its momentum is energy for it to continue breaking more break of structures in that direction. Alright, that's very simple explanation. So the next thing I want to look at is market structure shift before we continue to anything else. Market structure shift or change of character. Alright, this is when the market completely changes its direction. Alright, completely to a new direction. Let's say we were in an uptrend, price suddenly starts going to downtrend. Alright, break of structure, break of structure, break of structure, break of structure, and then we have a market structure shift. Alright, this happens when our last higher low, alright, when our last higher low was violated and we see price closing below it with candlesticks, with heavy candlesticks, we say we have a change of character. We are no longer in an uptrend, we are in a downtrend. Alright, we are no longer in an uptrend, we are in a downtrend. That's when we have seen that market structure shift, or you can call it a change of character. Now we start creating lower high, lower low, lower high, lower low, lower high, lower low in that direction. Alright, initially we were creating higher high, higher low, higher high, higher low, higher high, higher low, higher high, and this was the last higher low. Right, and then price pushed above, and then we were expecting price to come to this higher low and then create a new higher high, but instead price clashed below it and closed below it with the candlesticks. It may be 1, 2, 3, whichever candlesticks, but with heavy candlesticks, we say we have a market structure shift or a change of character. The shift has shifted in the market. The buyers are no longer in control of the market. The sellers are stepping into the market. So this shift, all this change of character, it comes to signify the shift in energy, in momentum. No longer the buyers are no longer in control. The sellers are stepping into the market. So our work is now to shift together with price. We are no longer bullish, alright? So we start considering sales when we see this market structure shift or change of character. Alright, so this our last bush becomes our liquidity sweep. Alright, so this is no longer a break of structure but a liquidity sweep when we have this market structure. Alright, until we have this market structure, this is a break of structure. Alright, so when the price has closed below, then we can say this was a liquidity sweep. Alright, and then we can start considering sales in that direction. Alright, so the last thing I want to look at is the daring range. Alright, now what is a daring range? From the name daring range, this is where the focus of that day is. Alright, so when you come to your chart, the best thing you can do for you to identify your daily bias, you need to know your daring range. Alright, the focus where you are going, where the traders are putting focus at that particular time. Alright, and we have different daring ranges. We have depending on the time frame you are approaching your chart. Alright, so the daring range is the range that is between an active swing high and a swing low. Alright, swing high is just the structure of the market, like the ones I started with, when we have a swing low and a swing high. So this is a structure. Right, up to this point we don't have a break of structure. Forget about this one. We don't have a break of structure. So this is a structure. So in case we were, let's say we are in an uptrend, what do we expect? This was a break of structure, and now we have come, our price is about this point. We have this structure, our swing high and our swing low. What do we expect from that point? Alright, we said we expect a pullback after we have seen a break of structure. Why? Because price wants to come, gather more liquidity before it delivers. Alright, so our work is to locate ourselves below this point, around this area where price is going to come, gather more enough liquidity, and then we will deliver it together with the price. Now we'll take our trade from around this lower point, that's a discount, and then we'll buy up together with the price to create that another break or structure to the upside. Alright, so we have something which we call the premium and discount. Alright, so when we have our swing high and our swing low, in that case we take our Fibonacci tool, map from the swing low to the swing high, and we wait price to come below the 50%. Below is the 50% is what we call the discount level, and above is the premium. So when we are in an uptrend, we want price to come to the discount level below 50%, grab enough liquidity, enough energy, enough momentum before it continues up to create another break or structure. Right now this starts making sense, right? Very nice. So our swing high, our daring range is this now, between our swing high and our swing low. Alright, so at this point when we come to the chart and see something like this, we say now we are in uptrend and we are only supposed to take buys. Alright, and where should we take buys from? We'll just wait it, locate ourselves at the discount level and wait price to come to us, and then we'll take it up to that level. Alright, simple and straightforward. Alright, though yes, when it comes to the discount, there are some also things we have to consider, look at, checklist, tick them before we take the trade. Alright, so without wasting time, that's it. When price is at the swing high, we expect it to pull back for internal liquidity. When then it will continue with its original direction of an uptrend or a downtrend, depending on which direction price was moving prior to that daring range. Alright, so I hope that's very explanatory enough. I want to identify a few uptrend and a downtrend without going even further. Let's start from this point. Alright, we can say it is an uptrend, right? Break or structure, break or structure. Price did a retracement. You can see it, a retracement to this level, gathered enough liquidity, enough energy, and pushed above and created another break or structure. Right, did a little retracement, it went just all the way up, and then here now we have that what we call market structure shift around this point. You can call this a market structure shift. Market structure shift, price came up to this order block. Alright, and from that point now we say we have changed the direction. Now we are in a bearish market. And then you can see how price started creating now bearish structures, break structure to the downside. This is our lower high, creating a new lower low. right? Price pulled up to this order block. Name it. Don't want this video to be long. Price pulled it to this supply zone, right? And then from there we expect price to continue down and create another new lower low, and it did so. This was also another break structure to the downside, alright? Then price went all the way up to that point and also created, this was a miniature uptrend, but I want us to focus on this one. Also created a new bearish market, this was let's start from here. This was higher high, higher low, can see it, higher high, higher low, higher high, higher low, higher high, higher low. Right, up to that point we are bullish. What do we expect? We expected this price to retrace a little bit, then it continue and create a new higher high, right? But instead price retraced, but it also went down significantly with heavy momentum and closed below our previous higher low, creating a market structure shift, right? So we say this is a market structure shift, and now our bias has changed to a downtrend. We're no longer bullish, we are bearish. Alright, so that's it. Don't want to make this video so long. I don't know what else do you want me guys to look at. Alright, we are done with that. Let me look at the daring range. Yes, that's also what we looked at. See, the daring range is where the focus is at the moment. Let's say it is where we found our price, our swing high and our swing low, right there. And we saw this as a break of structure previously. So what should we expect? Suppose we came and our price was somewhere around up there, we should expect a pullback, and that's what happened. Price did a pullback up to this order block, and then from there also engage with price as we deliver up to that point and create a new break of structure, right? That's it. Just a few practice in the here and there, and everything will start making sense at the end of the day. Alright, that's it for this video. See you in the next one. Sign on.